What's good, Flair family? How we doing? How we doing? Happy day after Christmas. If you celebrate, if you don't, Hanukkah, Kwanzaa, all those things, whatever you celebrate, or if it's just a time to spend time with family for you, then that too as well. I am back with another video with you guys real quick. I want to talk about Spectra. Spectra is a yield trading and interest rate derivative platform. I'm going to take a look around, play a little bit, drop some stuff in some of these to show you how it works. And then, of course, do your own due diligence. We will drop the notes into the description and links so that you're able to get there. But this is the docs. And I want to start with this real quick just to show you a couple of things. As it says here, Spectra is a interest rate derivative. And essentially, you have the opportunity to lock in on fixed rates, trade the yield on certain tokens. These tokens have to be yield tokens. So if you look here, it says Spectra's yield token and principal token are minted on top of the ERC 4626. 4626 is an interest-bearing tokens from Ethereum, the Ethereum virtual machine. So here's some use cases for that. So there's pool creations, LPs. There's fixed rates, and then there's yield trading. And if you look here in these documents, it will go through it a little more for you. But let's just jump down real quickly to where it says what is yield. There's yield off of lending, staking, and then yield farming. Platforms like Yearn Finance. We're doing staking right now, something like Lido or Firelight, right? And then, of course, we got lending platforms like Kinetic on Flare. So here goes some quick examples. I just want to show you this kind of how this works out. And then I'm going to demonstrate it as well. But I thought I'd show you where you can find the documents, look at the documents, and then kind of walk through it yourself and do your own due diligence. So I'll put the link to the docs as well in the description. But I think there's some usefulness to this platform, and I kind of been studying a little bit. So first of all, fixed rate. You can lock in an APY of your yield generating position. So yield generating tokens. We know that sFLR is a yield generating token, right? sFLR has flare drops, and it also has FTSO rewards, which happen twice a week. So it is a yield generating token. So you can lock in the APY of that yield generating position for a certain period, kind of like a bond. And then they give you an example, right? For instance, if you supply 1,000 DAI, right, to Aave at 4% interest, there is no guarantee it won't drop the next day, right? And therefore, it's going to result in lower earnings. But let me make this screen a little bit bigger. I realize, and I'm going to get myself out of the picture for a second. There we go. Okay. So an example is you can lock in. You could lock in 4%. Right? Spectra will allow you to lock in the 4% for a specified period of time, 6 months, 1 year, etc. So if you supply your 1,000 DAI, typically that interest rate is going to go up and down. But here on Spectra, you can lock in that 4%. Whatever the rate should be, you can lock it in, right? So if the pool drops to 2%, you're locked in for whatever period of time to guarantee you to get the 4%. And this is, again, the fixed rate, right? Fixed rate. Another way to look at it is your principal token or PTs. You're buying it at a discount, essentially, right? So that flare token or whatever that DAI is in 6 months or a year with interest is going to be worth so much more than what it is today. So you're kind of locking in or buying it at a discount, kind of like a bond, right? Zero coupon bond mechanics, right? So again, if you go and you look at the next option is yield trading, right? So again, there is yield on the sFLR token from the FTSO rewards and the airdrops, right? That's yield. Hopefully you guys are following me on that one. That token automatically, the flare token automatically earns yield when it is sFLR, right? So this platform allows you to trade that yield in essence, right? So if you believe, look at this example here, is if you believe the current 4% on the protocol will rise due to market conditions, you can acquire these tokens, the yield tokens, you can acquire them now, right? So if the as it says right here, if the implied APY increases, we're entitled to a greater yield accrual than what initially we paid for that YT. So they call yield trading those tokens YTs. They call the other one a PT, right? The fixed rate, where you lock in a fixed rate and say, hey, listen, I'll just take my 4 or 5%. I'll keep it locked up for 6 months. I'm good, right? You get your token back. You also get your yield as well. And they call those principal tokens or PTs, okay? So just some basic stuff I want to go over. And then, of course, the third option and opportunity that it has on the platform, it has liquidity pools or liquidity provision. So providing liquidity in Spectra offers the opportunity to earn from various yield sources, pool swap fees, the native yield of the interest-bearing token, sFLR is a native interest-bearing token, the principal token fixed rate yield, Spectra's native APY emissions to the pools, and then incentives that are provided by third parties. What incentive is provided by third parties, you ask? rFLR. rFLR is the incentives provided by the third parties. FLR would be the third party, okay? So these are the different options that Spectra provides. And again, you need to read this a little more, but I'm really feeling the liquidity pool, right? Because look at all those fees that I could earn. And then I'm also really feeling this fixed rate, this lock-in on this PT, right? And let me tell you why, right? The principal token right now for us, is sFLR. And let me tell you why I'm looking at the principal token, the PT. And again, you got to do your own due diligence. This is not financial advice. Read that. That's going across, not financial advice. I'm just telling you what Steve is looking at doing. But if I could lock in an interest rate on my sFLR at 30 or 40% or whatever the platform is offering, I know that sFLR, the FLR drops are a big part of the yield on sFLR. The FLR drops are a big part of the yield on sFLR. Well, guess what? The FLR drops end next month. So I am thinking about locking up some of my sFLR or some of my wrap FLR, which will be converted to sFLR. I'm thinking about locking in that 30-some%, because once the FLR drops stop, now the sFLR is only really generating from staking or from FTSO delegation, and we know those rewards are 9 to 16%. Right, 21 or so percentage of the sFLR's yields come from FLR drops. So FLR drops is ending next month, right? So I'm considering locking in that 36% that the platform is providing, because once FLR drops go away, now the yields that sFLR is going to bring is going to be much lower, probably 9 to 20% or something like that. So that's my thought process. And then, of course, why in the liquidity provision? Because it's paying a lot of fees. It's paying a lot of fees. Yield generating strategy allows anyone to earn more yield on top of their interest-bearing tokens. Again, our interest-bearing token in this case is sFLR. So there you have it. Let's get into the platform, take a look at what we've got going on. So here's Spectra, app.spectra.finance, app.spectra.finance. Let me get out of the show and let me get you guys in the show. Let me make this a little bit bigger. Appreciate you guys always giving me good feedback. If you can't see stuff, hey man, I can't see it. It's too small. So here we go. All right, so let's get into it. So let's go to, right now you're looking at the different pools. Give me a sec here. Let me, I want to go to how you get here. So bear with me for a sec. I have been playing around in this one. I played around a little bit yesterday, last couple of days, and I've got some positions in there. So, but anyway, you're going to go to pools, right? You're going to go to the pools. Let me make this a little bit bigger. Okay. So you're going to go to pools, and you're going to go down and look for wrap FLR, right? And you see right here, it's showing you what is the interest-bearing token. The interest-bearing token on FLR is, of course, sFLR. And it shows you the pool. So this is FLR, right? And then wrap FLR. And then you've got a look at the max APY and what makes up that APY. 52.77% is what this is showing right now, right? And let's look at what it is for PT. This is for PT principal tokens. This is where you lock the future yield in. Lock in that fixed rate. You lock it in and say, hey, I'm going to put my FLR here, sFLR here. I'm going to be happy with this percentages over the next couple of months. And then I'll come back and get my tokens and I'll collect my yield. So this 52% breaks down. There's the PT fixed rate, which is 34 32.44%. That's the amount we're talking about locking in, right? You got LP fees that you earn, right? You got LP rewards, which are R-Flare, right? That's that third party. And then there's some sFLR yield that also comes off as well. So right now there's about $482,000. The expiration on this principal token, the expiration is May 16th, 2026, about 141 days, right? So that expires. And essentially at that point in time, you got to reset yourself to something new. It's pull it out, withdraw it, and then reset it to something else. Okay. So this is the principal token. Okay. So this is the fixed rates. So if I go over here, fixed rates, you see there's Flare, sFLR, same information, but this is now fixed rate. Before I was up looking in my portfolio, go to fixed rate and you'll see the wrap flare. There you go, sFLR, wrap flare pool. So if I click on that pool, it's going to take me in further. And you can kind of see this now. Here's where you're going to go is it's showing you the maturity date up here. Liquidity, of course, what the default token is, right? sFLR is a 4626 already. So I'm in the fixed rates. And here, once you go in here, you can look and see who's done some things, and it's going to show you general information about the pool and the vault. But once you go in here, you can select. If you don't have sFLR already, but you have some wrap flare, you can use that. If you have sFLR, let's go to click on xFLR, hit max. And once you do that, it's going to populate with some information here. This output, right, it tells you the estimated number of output tokens. So I'm putting in 0.13 sFLR. And what this is telling me is that my output, my PT, which is my principal token, right, which is going to be converted. So this is already sFLR, and so it's going to be converted to my PT tokens, right? This is a receipt token. My output is going to be 0.26. The fixed maturity yield, right? How much this is telling me, there's the value associated with my yield, right? And then here's the fixed APR. This is the fixed APR, APY, right? 35.34 we saw and 32.11, okay? Click on details. It tells you what the fees are. It tells you the price impact, right? Pool fees, and it tells you slippage. And then it also tells you what your minimum output for PT tokens will be on May 16th, 2026, which is you're going to get nothing less than 0.26 of these PT tokens for depositing 0.13 sFLR, okay? So this is showing you what the future, this output or minimum output is showing you what the future of this input is. I'm putting in 0.13. It's showing you what the future will look like. So I'm putting in 0.13. I'm swapping it for 0.2649 right here. See? Same thing down here. Okay. And it's telling me, okay, I've got all these fees, impacts, slippage. So my minimum I'm going to get back is going to be 0.26 of the principal token. And then I'm going to have to unwrap it and withdraw it if I want to work with it from there. But that is a principal. This is the principal. This is the fixed rate or the PT. See up here? Fixed rate or the PT. I'm using some sFLR to do that. Okay. So let's go ahead and let's do this. Buy the PT, because I'm going to show you what happens if you don't have sFLR in your wallet. Okay. So let's go ahead and approve it. So it's my sFLR input. And then here's my output, my PT or my principal, my fixed. I want to lock in the interest APR, APY until May 16th, 2026. Lock it in. So essentially, I'm giving you my token, Spectra. You're going to give me some interest and pay me and lock me in to guarantee that I'm going to be locked in at that 32%, right? Because here we are. The 32% right here, 32, 35 APY. I want to lock it in to make sure, because I know that sFLR yield is going to drop after January 2026 when the flare drops end. It'll still be a good yield generating token, don't get me wrong, but we know FTSO rewards are only about 5%. And we know 5 to 9%. And we know that staking is, probably up to 20%. So nothing though is 32 or 35%, right? So I want to lock that in. My move is I've already pulled out my sFLR from Kinetic. Again, not financial advice, not advising anyone to do that. Just documenting what I'm doing for my son so that when he watches this video, he knows what I want him to do. Because after all, I'm only making this for my son. All right, so I'm locking in my my reward. So it's done. I can go look at my portfolio, and I have okay. So over here, I'm going to go click on PT because that's what we're doing. A principal token, PT fixed. PT is fixed. YT is yield trading. PT is fixed. Lock me in. All right, so there's my PT position. You can see I've already got some stuff in here, about $20 I was playing around with. I just added 13 cents. And it's showing you these are my principal tokens, right? When it matures, okay? And then it's showing you what my future value, maturity redemption, what my future value is going to be, right? So that is all it takes in order to do a PT, right? That's all it takes. So let's go look at yield, YT. Let's go look at yield leverage. So you go click over here at the products, click on yield leverage. And again, what is yield leverage? Again, what is yield leverage? What is yield trading? Okay. Yield trading allows you, if you believe the current APY on the lending protocol, this is the lending protocol, will rise due to market conditions, you can acquire the YT token, right? You can acquire it because if I believe that what Spectra is going to pay, which right now Spectra is paying 36% is the implied. If I believe that that is going to rise above where I'm at today, I could lock that in, right? I could essentially buy that interest, right? I can buy that interest. So if it rises, if it increases, I'm entitled to a greater yield accrual than what is initially paid for those tokens. But also, if it goes down, I'm also in a position where I could come out of that with less. So it is important to understand that, right? Yield, trading yield, buy and sell yield tokens to gain or reduce exposure to APY volatility, right? And yield accrual. If some reason that yield, implied yield goes down, I could certainly come out of that with less, okay? I could certainly come out with that with less. So again, do your own due diligence, read up on this, search up on this, understand it better before you jump in. But I just want to show you how to do it. So the yield leverage, find flare. Right now, it's 482, 37, 36.48 is the implied yield. So click on that. And it's going to bring us to this screen. Okay, you can see here there's the base yield and here's the implied yield. So right here is a perfect example. The base yield and implied yield. Implied yield, you see it, this green line jumped up to 41%. So in this case, I went with the base yield. All right, I'm accruing that yield at base. Well, the implied right now is higher. If that implied in May 16th, 2026 stays like that, then I'm going to be in a position where I'm going to have a much higher yield haul, okay? Much higher yield haul. But let's look and see. Now, I don't have any more sFLR. You see it tells you the default token is sFLR. I don't have any more sFLR, but I do have wrap flare. So I'm going to use some of my wrap flare. And let's just say, let's see, I'll use 16, all right? Amount exceeds the balance, 13, sorry, okay. So let's just say I'm going to use 10 of these guys. Second, what's going on here? Yeah, let's go max, make it easy, sorry. Max, okay, so when I do max, now this is the YT, the output for the YT, sFLR May 16th, 2026. It's telling me for what I'm putting in, these 13 wrap flare tokens, valued at 14 cents, my future value would be 108. The yield, earning the yield on those 108.6. The implied APY is 37.66. And then the yield leverage, there's a leverage on here, which is good. Notational amount, right? Tells you the total pool volume required to process your swap, the notational amount, what the fees are, the pricing impact, right, which includes the pool fee, and then the slipping tolerance, okay? All of these are taken into account when we come up to this minimum output for the YT tokens. You will not receive less than the displayed amount of 108.11452. Then it shows you visually, here's my 13.22 wrap flare tokens. It's converting it to 7.4, and I'm swapping it for the yield tokens. These are receipt tokens, so there's not going to be, it's not going to like, oh my God, this is a yield token. So I'm taking it's converting it to sFLR, and then it's swapping it. And my minimum amount that I'm going to get May 16th will be 108.11. Okay. So do you want to get yield leverage? You can get yield leverage. Click on get yield leverage. And then again, I can click down and look at the details. The details are the same thing we just looked at up there, right? 13, 108. Fees, after all the fees, the minimum I get back would be 108. Okay. So let's go ahead and approve that. So I'm getting a confirmation in my wallet now. All right, so I've got that approved. Now let's go ahead and confirm it. I'm waiting for that confirmation in my wallet as well. All right, there we go. All right, so I've got confirmation. It's submitted. It's confirmed. I can check it on my portfolio, and it's taking me right to my portfolio. I did a YT. So there's the YT. You can see I've already put some stuff in here. I've got about 15 bucks in there. And I also have some claimable yield. So I've already, because I've been doing this for a couple of days, I've actually already earned some yield, right? Because what I'm doing is I'm taking my wrap flare, my sFLR, I'm buying a yield token, sFLR yield trading token. I'm buying that. I know it's going to come with a certain amount of interest. I can claim that yield at any time. So right now I've got 4 of these yield trading sFLR tokens that I can claim those. All right, I can simply claim the yield, and it's going to pop up. All right, and it shows you my position. It shows you the yield I've accrued. So I've got 4 sFLR, right? And I can claim that. I'm going to save that for a day that I do the rewards claims, though, and let it build up a little bit. And then the last thing, let's go look at pools. Let's go look at pools, LP pools. So there's a couple ways we can get to that. LP pools. Okay. So the LP pools. In the LP pools, providing liquidity, right? And again, let's go back. Let's understand what we're dealing with here. This will assist you in how to provide liquidity. Okay. Tells you a little bit about when you pull out your liquidity, what to do, what to not do. Okay. And then when we go over to the reasons is that we're here. So what are the sources of yields in the liquidity pool? Liquidity providers in Spectra pools are entitled to the following yield streams of originating from pool swaps: native yield, principal token fixed, Spectra's native APY emissions, and then incentives provided by third parties, rFLR, plus any potential rewards emitted by underlying platforms to holders of the ERC-26. So if there's other stuff that's coming for sFLR, we're still entitled to earn that stuff essentially, right? So here we go. So let's go look at the pools. Let's go look at the liquidity pools. Again, I am liking the pools. It tells me for liquidity pools, here we go. Liquidity pools, I got a fixed rate of 32%, LP fees, LP rewards, which are rFLR, sFLR to get me that 52%. Now that of course will change, will fluctuate because as more users come in, more liquidity comes in, they're gonna have to spread it out. So I expect that to probably go down, go up essentially, but I know I'm getting 16 to 17% for rFLR, and I'm happy with that as a liquidity provider. Okay, so you click on the pool, and it's going to take us into that same situation, and then you're going to hit select, and I don't have any tokens. Let's see if I can do it with this last bit that I have of sFLR. Maybe. Let's see. While that's working, oh yeah, it does. Okay, great, perfect. All right, so balance mode recommendation. I recommend you do enable that, the most optimal liquidity allocation. So it's allocating your LP and your YT tokens, right? So it's taking that and splitting it into those. It also is giving me a minimum. Here's your output I'm going to get for what I'm putting in this LP. My pool share is showing me my pool share, my implied APY change, This is how your deposit will impact the pool's implied APY across. So obviously it's going to increase it a little bit. And then the new pool APY. This is how your deposit will impact the pool's APY. This is why I'm telling you, as more people start participating and getting to the LP, these APs are going to change, right? But it is what it is right now. So I just want to make sure you understand that. There's a slipping tolerance that will obviously be impacted in terms of what your minimum output's going to be. And then it shows you here. So for what I'm putting in, it's showing you what my minimum output LP is and what my minimum output YT. So I am participating as in any LP pairing, there will be impermanent loss. Okay, there is impermanent loss. And it talks about that. If you go to these docs and you look at these docs, it talks about LP and permission and IL, IL. It talks about impermanent loss. So understand that there will possibly be some impermanent loss, but they also say that it should be minimal. But again, read and do your own due diligence, guys. But essentially, what's happening is when I deposit that, it's going to create an LP that will consist of my sFLR token and the YT, the yield trading token as well. All right. So I'm going to go ahead and add to the liquidity. Oh, down here before I do that, I already have my stats in terms of what my pool share is because I'm already in this pool. My boost is 1x based on what the platform is providing. Here's my current LP tokens in the wallet. I've got 8,862. And over here, it tells you the breakdown, again, for the APY. Gives you the breakdown and how it's broken down. Same thing when I hovered over it, okay? And then here's the pool info, right? Wrap flare, underline, wrap flare, APY, liquidity, maturity date, swap fee, and then it shows you what the pool is composed of. IBT, the interest-bearing token, which is sFLR, and the PT, which PT or YT, excuse me, PT or YT. In this case, you see I'm getting sFLR and I'm putting in YT. Okay, so let's go ahead and confirm this. So when I confirm it, I'm adding liquidity. sFLR is what I'm inputting. I'm going to output and get an LP of sFLR and YT sFLR, right? And again, here's the details to show slipping tolerance and what my minimum output would be. Let's go ahead and hit approve. Okay, confirming in the wallet. Okay, so let's do confirm. Waiting for confirmation in the wallet. Here it goes. All right, transactions submitted. I can view my portfolio. It'll take me to my portfolio over here. And then right here, LP is my position here. So it shows my APY, my 52.7%. I'm earning now 16.9% rFLR rewards every month. This LP pool has 141 days remaining, expires on May 16th of 26. And I've got about $98 in value in there. And you can see when you hover it over, you got a PT, principal token, right? And you got sFLR. And it gives you the breakdown. So $89 of that is my principal token. $8 of that is my wrap flare, sFLR, okay? So there you go, guys. That is how you participate on Spectra. Again, important to make sure that you have the docs, read the docs before you jump in. Read the docs, get yourself informed. But once you get there, I just disconnected my wallet. But once you get there, I'm going to put in the notes the docs, the link to these docs as well. Read it over. Start with the overview. Go through the use cases, examples. What is the yield? There's FAQ, right? FAQ. What are the main benefits of principal tokens? You're locking in the current APY of the respective interest-bearing token. And again, I tell you again why I am interested in maybe doing some more in the principal tokens, because the current APY of that respective interest-bearing token, the interest-bearing token for us right now is sFLR. And sFLR has airdrops and FTSO rewards and or staking built into their APY. This platform is paying somewhere in that same arena actually a little bit better, but somewhere in the same arena, 35%, right? It's paying that. So I know flare drops are going to end. So sFLR will not be interest bearing up as much as it should be. Once the flare drops go away, it's going to drop. So I want to lock in that 35%. So that's why I would play around with principal tokens. Okay. Can I sell them before maturity? You can sell them before maturity. Obviously, it's going to reduce the amount of money you're getting, right? The corresponding token. And then the token will be burned. Can I choose the maturity date? No, the platform will do that for you. Here goes the yield token. What are the main benefits of yield tokens? Obviously, it's a derivative that offers exposure to the yield volatility. Hold on to that. Entitles the holder to ongoing yield accrual. As you notice, when I showed you my YT, I'm already starting to accrue. Go to my portfolio, share this with you. YT. I'm already starting to accrue yield, right? See, I'm already accruing yield. And then if you look at this, it says it entitles me to ongoing yield accrual. So I can claim that at any time, okay? If the live IBT, the interest-bearing token, which is sFLR, increases while holding that yield token, I'm entitled to a greater yield accrual as well. So what that means is right now, I know this is paying for FLR. This YT token right now is paying 37.54%. What this is saying is if that goes up higher, I'm entitled to earn more yield, right? I'm entitled to earn more yield, okay? What happens when they expire? They're going to trend towards zero as it gets close to expiration date. We will continuously accrue yield, which can be claimed at any point. When they expire, no further action is needed besides claiming the remaining fully accrued yield. So claim it, and then you can pull it out and redo it again if you want to. Liquidity pool, what are the main benefits of the LP token? The LP token is providing us with accrued pool fees, swap fees, native yield, right? Obviously, the LP provides liquidity for the platform. Principal token, I went over these before. There you go. Can I withdraw my LP tokens at any time? Yes, you can withdraw it at any time before the pool's expiration, but withdrawing from the pool before expiration can be either one-sided or two-sided. The one-sided option involves converting your LP tokens back to a single asset and may incur slippage. Okay, what happens to the LP token when the pool expires? We can just simply unwind to the underlying or the interest-bearing token sFLR. That's not subject to liquidity constraints, and they can be fully redeemed at maturity. And then if you wanted to create pools, there's more information on that. Liquidity provisions, how to provide liquidity. We talked about that. How to remove it. So there you go. There's the information you've got, guys. Let me know if you got questions, comments. I wanted to share this with you. Spectra dropped about, I don't know, maybe a week ago or so. I've been a little busy and finally got some time to jump into it. So let me know if you got questions. Otherwise, have a great day. Hopefully everyone had a good holiday and have a great weekend. Thank you.